generally, I feel all the very liquid, very highly traded assets, such as equity, bond, money market fund, are easy to be tokenized. Or at least if we do the RWAs of them, there is a market, either retail, institution, or a combination of both. However, if it's like tokenization of real estate itself, I actually doubt whether it has like a real case scenario for the usage. Why? Because if you are fractionizing let's say a property, then what's the so-called value associated with that property or that one piece of that property? So that's one thing. Like whether if people are really doing the trade of it, do they get a rental benefit? Or if they can own that partially and be able to live in that property or use that property, and also ultimately whether the regulators of the real estates of the properties, do they recognize that?
Exactly.
So if it's like tokenization of real estate, I actually think it's a little bit like a fake pinpoints.
Yeah, so a couple of risks that you laid out here, and I think this is a very important conversation. So one thing, you mentioned at the top, lack of liquidity. So a lot of people are talking about moving illegal assets onto this chain. Then it could actually exaggerate all these moves, right? So small trades can lead to very big price movements, and that could actually leave out a lot of investors who are not as informed as these institutions and companies, right?
Exactly. That's why I would suggest that the very well understood assets, such as bond equity, etc., should be tokenized. Maybe some others should, gradually. Let's see how that goes. But right now, if in terms of the RWA markets, it's actually a 25 billion market. Although it's growing a lot, actually it's like nearly 60% year-to-date growth. However, comparing with the traditional assets, it's a 400 trillion asset class we're looking at. So half of the current RWAs, actually slightly more than half, are private credit. And then others followed are commodities, bonds, money market funds specifically, and then we're looking at also tokenized stocks.
How is this going to be playing out differently from the COVID era liquidity fueled NFT craze? I know that it's not the same product we're talking about, but what is the difference and how is this different in 2025?
I think it's highly different. Actually, if we want to categorize all the RWAs like loosely, you can actually look at financial assets, the non-financial assets, and then offer to institutional or TradFi investors, and then to maybe more on-chain and crypto-native investors, and that made us like into 4 quadrants. If we look at NFT, I think it falls into this category, which is a non-financial assets offered to on-chain users. But RWAs is much more more than NFTs. Actually, I personally think NFT or this specific quadrant is the smallest. The larger market we're looking at are the financial assets. Like I said, very well understood financial assets offered to either traditional financial investors and the on-chain people or crypto people. Yeah.
So traditional finance people, Wall Street is paying attention to what's going on with the stable coin, and I feel like the whole crypto industry is sort of getting creative and new structures and products are coming in, and I wonder how that affects exchanges like BitGet that you're the CEO of, because maybe people are looking at all these other options, right? We've got publicly listed companies, cryptocurrency, digital asset, reserve companies as well. There are so many other options. Do you think that people are finding many other attractive options perhaps than to buy cryptocurrencies like Bitcoin and Ethereum directly on exchanges right now?
Yeah, that's a good question. So it's like a threat and opportunity. Honestly, in terms of just buying crypto or holding a form of crypto, we're not just competing with each other, with other offshore exchanges. We're also competing with brokers like Robinhood or ETF issuers like BlackRock and other ETF issuers. So it's a highly competitive market if we're looking at only, Bitcoin and Ethereum. But so how we think about it is like the threat and opportunity. The opportunity lies where is like, what does users need? Like, what do our users really need, and what are the things that they want to trade? Ultimately, we are just an exchange. So we are a platform that offer everything. Hopefully, we can offer everything that our users want. Actually, this year we are developing a lot on offering tokenized RWAs, such as tokenized equities. So right now, you can do 24/7 trading on Biget to trade the tokenized tokenized Apple, tokenized Nvidia. This is an offering that we did together with our partner Xstocks. So collaborations like this, I think it's going to be actually more and more important. We're going to publish a new concept. We're not just exchange or decentralized exchanges. We call it, I can't reveal the name yet, but basically the idea is to have like universal exchanges that we offer all sorts of tokenized tokenized assets, even including the Forex.
What is the major draw for these users of the Bitget buying shares of Apple and Nvidia, but tokenized?
So number one, 24/7. As we know, U.S. stock market doesn't work 24/7, but our crypto world works 24/7. So be able to offer that product to our users like globally and on every time, that's actually very important. Number one, it's also a fraction of it. So there are certain equities on the stock market that are very, very expensive. Some users can just by trading with us, they can just buy a part of it rather than the whole of it. Another thing I would say is also about the user base we're looking at. Many, for example, Asian users, they don't have a proof of address in the U.S., so they can't even open an account in the U.S. stock market. Right. So, of course, there are other ways, but basically we're just providing a new channel for our not just crypto user, but hopefully more mass adoption users to be able to trade all the stocks 24/7.